Accountability. What does this word mean to yourselves? Before we began this great journey as a consultancy group together, we sat down and we figured out what exactly does a good company mean to us. The main definition to this problem that we discovered was the word accountability. In the financial industry, it always comes back to, are you reliable? Are you making decisions in the best interest of your clients that reflect on your own personal performance? Strangely enough though, in this journey, we discovered that many firms do not embody this term. Many firms don't fully take on the accountability of their actions. Looking at the crisis in 2008, this problem is totally presented. Over leverage, too much risk, looking for those short-term gains. Before we begin today, we'd like to thank you for really bringing a certain level of belief back into the financial industry. Your compensation packages built on that idea of being responsible for your actions and paying back to investors when the performance is not there really is inspiring. And today we are going to tell you how to take this core value proposition of integrity into the Japanese markets for success. We are Caliber Consulting. My name is John. These are my two colleagues, Braden and Matt. And we are excited today to tell you our resolution. The primary issue that we identified today was exactly how are we going to enter this Japanese market? Will we be looking at acquiring a new firm through mergers and acquisitions? Or will we be looking at starting a Greenfield project? These are two different approaches to the same end goal. Some secondary issues that we identified today. Is this the right timing to enter the Japanese market? Are things on the upswing? Are we entering in at a wrong time? Currency exchange. As you are well aware as an international company, the various currencies, the exchange rates, all of these play into the end result of the exact level of profitability that you will be receiving as a company. Orbis' organizational compatibility with the Japanese market. Will the consumers accept your proposition? And the overall bureaucracy of the entry. This is dealing with the licenses that you've mentioned if we do the Greenfield entrance. And how to exactly portray to the Japanese legislation that we do have the experience required to start this kind of operation. Our brief answer to you today is that we will be entering through acquiring an existing firm to enter the Japanese market. In short, we will expand on this later. It essentially takes all the guessing game out of it. We purchase an already proven commodity in the Japanese marketplace, and this takes a lot of those growing pains out of the operation. We can kind of just jump in and really capitalize on the open market space that is currently available. I'll be passing off to my colleague Matt, who will be going through the industry analysis and looking into other applicable measures of this.
Thank you, John. So when we were analyzing Orbis, one thing that we absolutely loved about the company is that it already has such an established international presence. It has major offices, London, Hong Kong, Vancouver, and what we took from that is that it already knows how to streamline the transition of moving from one current market into another, therefore understanding the different cultural implications, the currencies changes, and as well as different financial products, as well as understanding different cultural and customer needs. One thing that we absolutely loved, again, was your organization's philosophy. Where it actually is, there's no outside stakeholder accountability. It's pretty much, it all stems down to adding value for the clients. Sometimes outside stakeholders may want just a quick return, but that can't be good enough. It always comes down to the bottom line of providing value for your customers. And with that, we continually promote long-term sustainability, prosperity, and kind of more moving towards are moving less towards short-term volatility and really focusing on those long-term gains. Some of the opportunities that are presenting right now in the Japanese market is pretty much the NISA, which we found was very close to a tax-free savings account. This was implemented 2 years ago, and that's why we believe that time is a very critical factor. We need to jump into these markets a lot sooner, otherwise our competitors, or Orbis's competitors, are going to be starting to continually tap into these market segments and really start building those customer relationships, which are eventually going to be very hard to break down. Some of the threats are obviously, even though you have done a few, or you have an international presence and you have different offices, one culture is obviously substantially different than the other. So any incompatibilities, any bottlenecks can really add to the process and really take up a lot of time, money, and allocation and resource management. You're already entering into a saturated market, so this is where your brand identity is going to really take play. So your biggest competitors are obviously going to be those that currently exist in Japan, and this can be either domestic or it can be international. It's all those competitors that are already established at the point where Orbis needs to be at. They can have currency reserves, therefore managing or better managing that currency exchange risk. Some of the things about the buyers will obviously come down to the risk tolerance. While other companies are going to be saying this is a market downturn and they're going to be trying to make excuses and really try and maintain that customer relationships, Orbis's core value really stems down to we focus on long-term sustainability. This will be a long-term plan. We do plan on holding on to these stocks. This is all part of the objectives, the real core of Orbis, in which we thought was actually a substantial strength. This is where Orbis really begins to shine. Some of the innovations of your suppliers will obviously become a bigger threat. Whoever is able to match better products for your customers' needs is obviously going to be the one that wins. Client relationships are a major factor, and that's why in this industry, brand identity is everything. Some of the, again, it really does come down to battle of the brands. What makes one financial product substantially different? Returns may fluctuate, but again, it really comes down to those long-term gains. So how do we differentiate Orbis? It's going to come down to buying that new target firm, as John was previously mentioning, really starting to get their client list, more importantly, their employees. You want to retain those employees and make sure that you actually learn from them, that you properly utilize their information and slowly transition Orbis's values, Orbis's requirements over into the new Japanese market.
I'll be walking us through the financials today. So, in a brief overview, we did a brief evaluation of the Greenfield investment. We did that by first approximating some certain revenues off the information provided, the expenses, and then doing a simple NPV calculation. So, how we calculated the revenue streams was based off the two funds currently offered in the UK, and we took these numbers and approximated them for the new marketplace. So currently in the UK equity fund market, there's currently $11 billion being traded. The amount earned over the benchmark, as you can see here, is 124.3 million roughly. And due to your current compensation style of taking the 50% over the benchmark and to your reserve, the amount actually going to Orbis is $62.1 million. The Global Balance Fund, we estimated this at roughly $5 billion. This is due to the lesser popularity than the equity fund. So this is strictly an estimation here. The amount earned over the benchmark was $51.5 million, and the amount retained by Orbis was $25.7. These aren't strictly the revenue numbers we'll go off of. I'll explain that a bit further when we actually apply these to the situation. Some quick expenses to look over here. We estimated the capital requirements of entering into the new market at roughly $1 million, and the annual tax of $1,500. The legal cost, $150,000. And to get your name out there in the Greenfield project, you are an unknown firm in this Japanese marketplace. So to get these clients in and actually get revenue coming into your firm, a substantial marketing budget of roughly $200,000 would be needed for the next few years. And sorry, these are 1, 2, and 3 years here. Our operating expenses taken off of sort of the average in the Japanese market currently. So this is just servicing your clients, keeping up to date with the current market, is estimated at roughly $251 million. So to get a more clear picture of the revenue streams, we took the 25% of the target, which is a domestic firm in Japan currently. So we took 25% because you are not currently in Japan. We felt that 25% was a fair approximation of how much revenue we could evaluate closer to the target value. We took 50% of the value of the current Orbis Global Equity Fund revenue streams in Britain, and we took 75% of the Global Balanced Fund. The reason why it was more weighted towards the Global Balanced Fund is because there is a tendency in Japan to be more conservative investments. So we believe there would be a preference in Japan for your Global Balanced Fund. These are the segmented revenues on the side, and we weighted these at 50, 70, and 30. To discount these potential net revenue streams, we took the T-bill rate of 1.22%. This is based off the current, as of Friday, the 10-year T-bill rate. The beta of 0, as it is not a publicly traded company. And the market risk was 7.52. This is based off of the 2014 and 2015 earnings in the S&P 500. And the rate of equity came out to 1.22%. The cost of debt is just an estimation currently based on current market factors of 6%, coming out to a WACC of 5.52%. Here's our net cash flows here. I'll skim to the net NPV here. As you can see, the Greenfield in the worst case scenario, base case scenario, and best case scenario all come out severely negative. We believe it would have terrible implications for Orbis to start a Greenfield investment in the short term, and even in the long term we could expect some positive NPVs, but it would take so long to recover from these losses that it's simply not a smart business move. Here we did a similar evaluation for acquiring a firm. So this is based off of 90% of the target value, 50% of the Orbis value, and 100% of the Get Balanced Fund. We raised these values as you will be entering into a known competitor at this point if we acquired a company like Target. So we can expect higher percentages of companies like Target's revenue streams. And we can leverage those relationships and really push those balanced funds to the conservative investor population in Japan. And, oh, sorry, wrong order here, but this comes out to, in the short term for the next 3 years, we're looking at a loss in 3 years of the worst case and base case, significantly better than a Greenfield project. And then the long term, these losses would be captured. And in the best case scenario of factoring about a 25% growth rate, we are looking at positive amounts. In the valuation for acquiring a firm, we just did the simple the P over E multiple approach, as well as the P over sales multiple approach. And this came out to an average of $8.4 million. I'll be passing off to my colleague Braden, and he's going to go over some alternatives to our recommendation.
Thanks, John. So, given the current macroeconomic factors and through careful financial analysis, we bring forward 3 courses of action for Orbis. First one being is the Greenfield project, which would be entering the market by yourself without any established clientele or expertise or any sort of land, plants, or any kind of fixed assets there. The second one was to be acquiring a Japanese firm who is established, who has the expertise, who has the knowledge and the experience working in their respective market. And the third option is to not enter the market at all and carry on business as is Orbis. So a few critical points that went into finding a solution for your problem. Avoiding a licensing process. Now, the licensing process takes roughly 1 year, as stated in the case, and it's crucial to jump on this market as it is emerging at this point in time. And time is a critical factor in this business strategy. Expand a clientele base as Orbis. You're an international company with bases all over the world, and this will just further your expansion into new markets and your clientele base. Now, This also allows you to tap into the retail market that is emerging, and really aligns with the connections, prosperity, and technology. Connections being connections around the world with Japanese markets and investors there, as well as prosperity as growing your company into further national presence. And technology goes into the new emerging market as the online investment.
Perfect. So our strategic recommendation for you today is obviously time is of the essence. However, once we establish, once Orbis has bought that target company, it's more now about a slow integration of slowly moving Orbis's employees, their resources, over into the new Japanese market to start tackling these substantial opportunities, the needs, the favorable age demographics where your clients are really going to be focusing more towards retiring, more looking for balancing the risk as well as diversifying internationally as Orbis has substantial products. And so one of our initial transitions is we're going to be making sure that we continue with the existing Japanese business line, as well as making sure we retain those key employees. During this time, we'd like to implement training current Orbis employees for the new Japanese firm, and therefore branching out during the Japanese expansion. Perfect. So some of the more key secondary recommendations are obviously we would like to implement plans, and it really depends, it really comes down to the marginal benefit. If it's really complex, what is the magnitude? Is it really, can we implement some really economic ideas which can really help build the brand, better allocate those resources, and continually make sure that the employees are happy and manage that information between Orbis's current system and the new Japanese culture. Managing the currency exchange risk is obviously going to be a very big part in which you want to buy your investment firm in Japan, and therefore you want to make sure you hedge actually and lock in those prices, either with options or other hedging options. With continual, in the long run, with continual employee rotation plans, we hope to, or we envision actually different kind of financial engineering terms, as well as making sure that we can use the Japanese culture throughout Orbis's investment strategy, as well as the other way around.
So this all sounds fantastic in theory, but how are we going to implement this and apply this to your organization? The first one is we're going to make a decision to acquire a new company to leverage the assets they currently hold in the financial market. Refine and evaluate a firm that meets your criteria and make them an offer, and then implement an employee retention program. So it's very important to retain the employees that work there already. So a retention program could involve slightly higher salaries or bonuses, or possibilities for growth in Orbis and traveling as you are a national company. Now, I start and training cycling of Orbis employees. Now, moving into the Japanese culture, the Japanese market, and the building, we would need, there's a bit of a language barrier for a possibility. So we start training of Japanese language to the current Orbis employees, and to really mitigate the language barrier in these firms. So the timeline here, what we like to see happen in 1 to 3 years. We established the Japanese home branch as Orbis's home branch in Japan. Continue rotating your employees throughout. Again, foothold in the retail market and integrate your values as Orbis. Build and expand the Japanese location to larger retail market. Few risks today would be not able to retain employees, retention programs, mitigation, transaction exposure risk would be to put a due diligence for that. and lack of compatibility is integration of the Orbis team. And now I'll have wrap it up.
I have a question about your NPV analysis on the acquisition. Am I interpreting it correctly that the NPV is negative, basically all but the best case?
It's
recommending that we enter?
Sorry, I didn't have enough time to fully explain that. It was only for the first 3 years, and we are expecting, as you're well aware as a business owner yourself, in the first few years there are much higher costs. But during the years to follow, we're looking at exceptional profits. So we'll recapture those losses very quickly. And by the third year, in every case except the worst case, and that's with only 5% growth in your client base, you're looking at breaking even at that point. And then in the future, it keeps growing, and the NPV will get more favorable.
You mentioned the importance of brand. Can you give me your thoughts on, would you recommend rebranding Target Code to Orbis, or using Target Code, using that brand name basically to retail Orbis products?
I believe it's essential to keep the Orbis brand name and make a presence in the new markets and expand nationally. And to have a presence in the Japanese market is just puts your name out there even more.
And then just to kind of further on touch on that, so we would like to further on with the Orbis name, obviously, but at the very beginning, it would be a very slow transition until Orbis becomes more acquainted with the Japanese market. So we would like to use the Toriko name at the very beginning, still utilizing their business lines, their client bases, as well as their employees, and really make sure that Orbis can really slowly integrate without a lot of feedback and shockwaves from just jumping into this new market.
Can I build on the first question a little bit further? How long do you expect it will take to recoup the initial investment in net present value? How long are you expecting that?
Within 6 years at the worst case. And looking at the base case and best case, it should be much sooner. Looking at the best case scenario, which is very favorable odds-wise, as the client base would have to grow fairly substantially, we'd look at more of a 4-year window, whereas in the base case it would be 5 years.
Did you think about access to capital and how you might structure getting the money to make the purchase of the target company?
We believe that would come from Orbis's existing reserves. If not, then there are different exchanges in which we would be able to possibly issue different kind of bonds, Yankee bonds, to actually gain that those different kind of capital. Once they lock in the acquisition price and they want to start hedging against that foreign exchange risk, there's definitely different put options as well as future contracts in which Orbis could enter to really hedge against that volatility.
And in terms of capital structure, just to add on to that, we'd actually have to see Orbis's current balance sheet to see what funds they have available, what their current debt equity split is, just so we can make more of an educated proposal for yourselves and give you more of a concrete solution.
As a consulting company, consulting, what is your duration of participation in this or this endeavor?
We believe that Orbis has expertise in its own financial markets and stuff and the like. We believe that we would be in the first year just to get things rolling in the implementation, and then I feel that you guys currently have the knowledge and experience to maintain in the financial market that is Japan.
Can I just ask the cultural integration? We briefly talked about the language barrier. What other big hurdles can we overcome?
It's just going to be, I guess, more transitioning Orbis's values into the Japanese culture, and that inherently by itself derives a lot of different kind of issues. So we would really like to slowly integrate. We'd like to keep the Japanese employees there. Meanwhile, on Orbis's side, get that language barrier, get them more taught and more up-to-date on Japanese culture. And yeah, eventually, in the long run, that's when you would actually start switching more of the current Japanese employees with more of the Orbis. You can start switching out more of the Japanese employees over into further different kind of Orbis branches, and therefore just kind of gain more integration and more assimilation together.
Okay, stop.